morning, good afternoon, good evening, good late at night, wherever you are in the world. There's almost 2,500 people registered for this web seminar with the none other than the Honorable Steve Ward and myself, Tom Hougaard. Before we start, I would like to extend a word of gratitude to Simon Campbell from the IX show, who is kindly assisting us tonight with any technical questions that we may have, plus providing a software to make this happen. On the 24th of November, 2023, I did a speech together with Steve Ward in London. The feedback that we had from this speech was off the charts. And as Steve and I walked away into the London night on that cold Friday evening, we discussed the possibility of perhaps doing a Q&A session, which would elaborate further some of the questions that had been asked during the afternoon session with nearly 300 people in London. And so I promised Steve that I would take him up on this offer, and that is what we're doing now. I have prepared a series of questions for Steve Ward, who in turn has prepared a series of questions for me. So let's see how the morning, afternoon, evening, or night, depending on where you are, let's see how it rolls out. I'd like to just hand over the word to Steve Ward so he can express whatever sentiment he feels right now. Hello, Steve, and welcome, and so glad that you're here.
Thanks, Tom, for agreeing to do the session. So yeah, like you said, I think the 24th of November was a great event. I mean, I enjoyed it. I spoke to a lot of people there. They seemed to enjoy it as well. So it's a nice chance to I guess hear maybe some things reinforced, hear some things that are new, and hopefully between the two of us we can give some people some insights and some actions that can make a difference for them.
Great. Well, Steve, do you want me to just get started? And I warn you that I have actually taken consultants in the form of my Telegram group. I've sort of put a feelers out. What do people want to ask you? And I've come up with approximately 9 questions, although it may be a little bit more as the evening progresses. But do you want to just get started on it?
I think so.
All right. Okay. First, a disclaimer: we're not offering advice, guidance, or any shape or form. You're all adults here, and please treat the information as you're receiving it tonight in an adult manner. Good. Question number 1. Steve, why do the majority of human beings become risk averse when they're winning? And why do they become risk reckless or risk inviting whenever they're losing?
Well, there's a number of things I think to consider here. One is, I guess, a general disposition. Actually, it's in humans and animals towards risk aversion in general. So that's quite interesting. And then this really, I think, aligns to Danny Kahneman's work in behavioral economics around either prospects theory or disposition effects. So he's found this tendency, and they've looked at it obviously in many different trials. Now, risk aversion, if we take that just in general, it's in animals and in humans, which is interesting. And what that would lead us to consider really is that risk aversion probably has some sort of evolutionary adaptation benefit to it. Risk aversion and we'll keep that. So risk aversion in general, we've also got to remember it's not an on-off. So risk aversion is a continuum, and some people are more risk averse than others in general, and some people will show higher levels of risk aversion in situations of winning than others. But the tendency, that's how I would frame it, the tendency as a human species is that we might display these behaviors. And again, I would go back to probably there's some evolutionary adaptations as to why that might be. Protections of gains when we've got them, particularly when we've got resource scarcity. And then obviously this tendency when there's the chance of loss or not enough to then obviously become a bit more, as you put it, restless or risk-seeking. So it's Kahneman would call it probably a bias or a heuristic. Other people might have different views on that, but it seems to be that it's something within us. What I would say, it does vary from person to person. It does vary from context to context. So we could see it as a tendency that we may see, and actually we may see it less so in experienced traders than we might do in newer traders. So there's a theory that this tendency can be ironed out to some degree through practice and experience.
Okay, so I think that then follows with the second question is a follow on from the first question. That is, so how does a trader that observes this in himself, how do they overcome this disposition? And if I might just interject, I think it was really interesting that you should bring in Daniel Kahneman, who received I believe he's received a Nobel Prize for his work in behavioral economics. But for me, what was really interesting is that I observed this 10 years before he wrote about it, because anybody who's ever been a broker on a trading floor will see that tendency of clients trying to get back and establish a degree of equilibrium. And if you can, how has this also been observed in animals? I'd love to hear that, please.
Well, in animals, and there was some research done. The article I read, and it's a long time ago now, was I think in Nature magazine, and they were looking at risk. They were looking at risk aversion in humans, but also the fact it's always interesting when things are in our species, but also obviously in the animal species. And again, why it's interesting is because if it's in both, then it is highly likely that there's some evolutionary advantage. Yeah, exactly. So if it's in humans, not in animals, then it might be a slightly different, lens to look at things through. But in animals, for example, they'll get things where, in foraging behavior, and when are they foraging more heavily? When are they foraging less heavily? There's behaviors around the fact that obviously animals, in terms of their risk behavior, animals don't tend to, animals as a tendency are generally risk averse in their behavior. They don't take unnecessary risks because there's often no evolutionary upside for the risk of mortality. So there's a kind of as there is in humans, there's a stronger tendency, a negativity bias around survival. Survival always comes first. Thriving, risk first, reward second, because there's no reward if you're dead. There's no thriving if you're dead. So, with us and animals, we're sharing that baseline is, we've got to survive this moment, survive the next moment, survive the day, survive the week. In fact, even a week's a long time frame for us to be thinking in. So I think, the thing with trading behavior, and the longer I've been involved in this, so close to 19 years now, unfortunately, sometimes the more difficult it's become because it's so complex. Why does a person do a certain thing at a certain time? There are so many forces at play: psychological, biological, environmental, in the moment, past history. All these things play out. And so, it could be a bias might explain why a person does what somebody does, but also a person's skill level might explain why they do what they do. Somebody's level of training could also explain why they did what they did. Market context could explain why they did what they did. So there's all these forces being applied at any given moment. But if we come back to this general tendency that people are probably risk averse, so they're less likely to take risk in a situation of gain. Because, and again, like you said, we know a lot of these things already. Psychologists and maybe even neuroscientists do the research that often tells us scientifically what we know already. A bird in the hand is worth two in the bush. That phrase has been around for a very long time, but that explains risk aversion in situations of gain in kind of ancient English wisdom. So, when you've got it, if you think about biologically resources or evolutionary terms, resources were scarce. You've got to kind of look after what you've got. It's quite important. When we're losing, and again, this is in a situation of loss, when you're already in that losing situation, then it's like in a fight for survival. You are, there's almost like the risk. The risks become less prohibitive. The goal of getting back to where you are become more dominant. So yeah.
Okay.
Then how do you overcome it? So So there's a number of factors. First, you need to be aware of how it plays out for you. So I think the key thing with this disposition is all behavior isn't just disposition. You know, we're a combination of disposition, we're a combination of learning and training, experience, and also contextual factors. So if we assume some of these biases are dispositional, they may be inherent. And I think in the research I last read, this applies to about 70 to 80% of people, somewhere in that sort of range. So it's not all people. In fact, even Danny Kahneman talks about loss aversion being in most people, but he didn't say all people. So that's quite an interesting insight. We should,
yes.
And the work that I've done around personality profiling also suggests that we have a very wide range of levels of risk aversion in the trading community, that we're not all the same by any means. So the only option really the person's got is what we can train or what we can learn, if we assume disposition is fixed. So we can develop a trading process that might allow us to counteract this. Yeah, so we could put it into our process, even in terms of the markets we trade, how we trade those markets. Then we can also put it in terms of, if we want to be able to hold those winning trades for longer, or as you would do, add into those positions. Once we know what those behaviors are, we can find processes for developing those behaviors, but they have to be trained and developed, and it will be easier for some people than it will be for other people based on all other dispositional factors. But we've really, it comes down to, we either put it into the process where we can, or we train ourselves, kind of, let's call it the internal framework. So, mind, brain, body system, to be able to do the skill, and then we develop it through practice. But yeah, process and practice, probably the two key mechanisms.
Now, so what I didn't warn people about was that I wanted to, wherever it was appropriate, add my own experience to these questions. I posted these questions in my forum, and some people asked if I was going to answer the questions as well. And I'm not to the extent that you are, but perhaps it would be appropriate that I contributed to your answer with my own personal experience.
Absolutely.
I'd say the difference between you and I is that I speak from a personal point of view, but you speak from the point of view of having a broad user face of inputs, which I unfortunately don't have. So when if I was to answer that question myself, I wouldn't be able to give us an elaborate answer as you have, but I can point to some of the things that I know are very important for me in my trading to avoid this particular bias. And I say avoid, but I can't completely eradicate it. And that will tie in neatly to my first part of my answer, and that is, in trading, you can get rewarded for doing the wrong thing. You may get away with not having a stop loss, or you may get away with canceling your stop loss, and then the market turns and goes in your favor. And so you constantly have to weigh up the evidence that you have. Was that based on the right process, or was it based around you just being blind lucky? So I found that there are certain prerequisites that I need in order to go through the trading day where I adhere to a process. And the first one is I need to make sure, and I went through this in our talk in London, but it's sort of worth just repeating here, but it's very micro focused, as opposed to, it applies to me. I got to make sure that I'm rested. I can't go in after having boozing all night. Okay, those days are long gone for me anyway, but I remember those days when you would work till 7, 8 o'clock at night in the city of London, and then you would go out with clients and you would end up on some seedy bar at 2 o'clock in the morning, and knowing full well that you had to be back at the desk at 7 o'clock in the morning. Not conducive for right trading. So what I find is that when my mind is rested, I do the right thing. Meaning, for example, that if I do have to remove myself from my screens, I will do that. But if I'm not rested, if I am burdened down by fatigue, I find that taking those critical decisions are a lot harder to do. So I'm very cautious if I find that I sit down in front of the trading screen and I haven't got as much kip eye, or shut eye, as you say in English, as I should have. That's the first thing. And there's just one more thing. And this is such a minor thing, but it has truthfully helped me significantly. When I open my trading account, there's all the blinking lights and all of that. I take a trading ticket and I place it over my P&L. Also, down at the bottom of the screen, I don't look at my open positions. One, I don't want to know what my P&L is during the day because I don't want to be unnecessarily swayed one way or another. So if I'm down thousands on the morning, I don't really want to know, because I know then that would provoke a sensation of wanting to get back to equilibrium. And that, I'm afraid of, is going to jeopardize how I read the charts. Because if you are emotionally under pressure, and this could be through epinephrine, dopamine, all this cocktail of hormones that are racing around and coagulating through my bloodstream, I know that I could easily just slightly be swayed of, I'm just going to jump the gun on this particular trade because I think the setup is there, rather than just waiting for the setup. So by not looking at the P&L, I am forcing myself to trade the chart as is. Also, when I am in a good trade, and one of my hallmarks as a trader is I like to add to my winning trades, I don't actually want to look at my trading open positions, because I might all of a sudden be thinking, ooh, that's a big position. Oh, I better take something home here. So I try to be as clinical about it. And I find that if I'm rested, then I do that much better than if I haven't had enough rest. So that was my contribution to your answer, Steve.
And what I'll just add into that, if we look at biases in general, then we can, with relative confidence, say that if a person is stressed, if they are experiencing intense emotion, or they're fatigued, then they'll be more prone to any bias. So, as a general tendency, again, as an upfront process, managing stress accordingly, managing emotions accordingly, and managing energy/fatigue accordingly become very important as front-end process behaviors, as you've described what you do, because of that, and not just in terms of reducing bias proneness, but also improving cognition for making better decisions in general. So, what might seem like, often good old-fashioned advice, sleep well, eat well, hydrate, are actually fundamental behaviors when it comes to making good decisions.
I can't help but smile when you're talking about this, because you do sound a little bit like my mother, rest her, but that motherly advice: have you eaten? Have you slept well? But when we start our trading journey, no one really says that to us. We are being told that this is all about technique this, technique that. It's all about how we address the actual strategy, and very little attention is actually being shared about how much importance we should give to the other factors that are just generally contributing to our overall well-being as well. So I think that's a good point. Now, the third question is actually quite a long question. So just allow me while I read you through the question. There's a great weight of literature from clinical psychology that argues that our behavior is the result of our early childhood and our upbringing and how our parents were. And many want-to be traders have sought the help from professional therapists, psychologists, and alternative treatment methods like tapping, like hypnotherapy, like neuro-linguistic programming, Scientology, to name a few, to retrace those early traumas with a view to resolve them to become better traders. Now, I'm biased here because I'm highly skeptical of this argument. And the reason why I'm highly skeptical of it is that the failure rate in trading is so tremendously high that I'm arguing is that what is it that 90% of all parents did? Apparently something to all up-and-coming traders that sabotage their efforts. That to me seems statistically improbable and entirely unrealistic, that we should somehow clear our childhood of traumas and then we will all become expert traders. But this is my opinion, and I would like to hear your opinion.
Okay. So first one is, I'm not a clinical psychologist. I'm providing this as a sort of through a performance psychology lens, but with a significant amount of psychological training. So the first thing is, I think, let's acknowledge that for some people, seeking out that treatment may be beneficial. So there may be some reasons and benefits for seeking out that guidance and support, whether it be trading related or not. So, and different things work for different people, whether it's psychology, whether it's, hypnotherapy, NLP, different people will respond in different ways. So there's a lot of things we've got to consider. I think the one thing about any question in psychology in general, but also in trading psychology, is often the answer is it depends. Without knowing more information and context. But a few of my thoughts are this: when we look at behavior, the behavior that we might do today, and we think about, well, what are the forces that are driving that behavior? Then fundamentally, we've got three core forces that have shaped us as to who we are. One of those is genetics, so that's already been taken care of. And then we've got environments and experiences. When we look at who we've become, and as a result, what we might do today and what we might do tomorrow, the shaping process is largely environment and experiences. So we've all got a learning history. We've all learnt ways of thinking. We've all got beliefs about ourselves, about the world, other people, about markets, about trading, about risk, about uncertainty, about success, about failure, which we've picked up along the way. We've got values that we've picked up along the way. So we are being shaped continuously. So for some people in that learning history, there will be events that will have been clinically, we could categorize as traumatic, and they may or they may not play out in their trading. Now, when we look at, is it true that all people that have had something traumatic might experience that are trading? I don't have the data to say yes or no, but it's not improbable that some events may play out in the future. Certainly in the field of psychoanalysis, they would say very strongly that these kind of fractal moments and memories from the past are often playing out. So that it might depend on your brand of psychology, might have a different view. Mine slightly more from a behavior perspective. But even in my field, we would acknowledge that we might do things now and tomorrow based on things that have happened to us in the past. How we learn, like you talked earlier, about you can do the wrong thing and you can be rewarded, and you can do the right thing and you can be rewarded. So behaviors are reinforced. And if you think about evolution, the evolutionary process is variation, try lots of things out, selection, see what works, and then retention, keep what works. And if we think about that in terms of our behaviors as we're going through life, we're doing a variety of different behaviors, and then we select some. Well, which ones do we select? We tend to select the ones that have been reinforced, and then we retain those ones, whether they may be helpful or not over time. So in that learning history, I think we have to acknowledge there might have been things that have happened to us, or have occurred to us, that may shape what happens next. What proportion that is, I don't have the data to know. But we've got to remember, again, there are so many forces. We're looking at trading behavior. It might be partly learning history. It might be in that moment something happening for that person, just in that moment. An emotional response, a stress response. It could be a market force. It could be a contextual outside of markets force. It could be a combination of all these things. When we look at typical trading behaviors, this person's not running their profits, this person's not cutting their losses, this person's not pulling the trigger, this person is over trading. When I see all these different behaviors in people, and people often say to me, what are the 3 steps? What's the playbook? The reality is, I don't know, because it can be so different for each individual. Because for some people, it might be clearly something from the past playing out. For somebody else, it might be actually a lack of skill. They don't have a good trading process or knowledge, nothing to do with the past. Even if they've got trauma in the past, the trauma in the past isn't causing the behavioral problem in that moment. For other people, it might be just, they're very reactive to the stress response, and that might be playing out. So how do we manage that? So we've got kind of psycho, bio, social, sort of the 3 layers of how we might look at behavior.
That's a rich word.
Yeah, and we've got to work out, is it psychological, is it biological, is it social or contextual? And all of these forces can play out. So I think, we have to be, again, this is where we have to be, or I am cautious when I'm diagnosing or thinking about why a person did what they did, without sufficient knowledge of current context, learning history, skill, experience, external forces, and so on, because they can all be factors.
Okay, fair enough. Thanks a lot. I appreciate that. Let's go on to question number 4. In the talk in London on the 24th of November 2023, you stated that all traders you coach go through periods of winning and periods of losing. In your professional experience, would you rank one experience, say how we behave during losing streaks, over the other, say how we behave during winning streaks, from a learning point of view? And in other words, just to dumb it down for myself, do your clients learn more from what they did right or what they did wrong?
I would say, from my experience, and probably the researcher might support this, that people are probably more introspective and probably therefore learn more from when they've had losing periods or losses in general, or when they've made mistakes. I think the tendency, and again, it's partly negativity bias and survival bias and evolutionary advantage. Staying alive, not making the same mistake twice, is key. So I think there's a biological as well as psychological gains to really drilling into losses. So I would say the tendency behavior is, yes, introspection higher during losing periods, probably more learning done. However, I would caveat that with that actually for high performance, we should be doing both. We should also be seeking to learn from when we're successful, and certainly in solution-focused psychology or solution-focused coaching, they would place a large emphasis on, knowing what you do well, understanding why you do what you do well, what are the internal factors that contribute to that success, what are the external factors that contribute, which of those are controllable, how can you replicate success over time. So I think the ideal would be that we would be doing both, but I think we have to acknowledge the tendency is going to be probably easier and more likely we do it when we're losing, but we need to build the process and the behaviors to also do it while we are winning.
There is a quote, and I can't remember it word by word, but it is the behavioral change that you're seeking lies in the places you don't want to look. And I find that I found, but I also find that my learning as a trader and my learning as a human being always rests in the things that I feel where I could have done better. We tend as human beings to take our victories for granted, and we dismiss our defeats as temporary. And I found that, and I think this is actually a really crucial point, just to pause for a second, and that is that I don't think I would be where I am today had I not spent an overt amount of time researching what I did wrong. But that's not enough. What progressed the journey and the pace of the evolution as a trader was to constantly remind myself of the things that I had a tendency to gravitate towards. I think I told you in a private conversation about an interview that I saw with a gentleman called Joe Rogan, and he was interviewing a film producer. I think it was Guy Pearce, and Guy Ritchie. And Guy Ritchie was talking about how the key to his evolution as a film producer, as a rather well-known film producer, was to set aside time every single day to remind himself of two things. Where is it that he would like to go? And what is the behavior that he needs to, at all costs, avoid to repeat? And he found that if you don't set a time aside every single day to reinforce where you want to go and what you should be mindful of, which is what your natural tendencies, your natural proclivities. If you don't have some sort of reinforcement of that, then you very, very quickly find yourself that your subconscious mind is going to take over and you'll gravitate into old habits. We're coming up to New Year's Eve this month, and we'll all be sitting around on New Year's Eve talking about all the things that we'll promise ourselves, and the gyms will be full in January and February, and come March and April, you can get those membership from pennies for pennies on the pound. And I find that is probably one of the key moments in me as a human being, but in this context as a trader, was that I actually began every single day setting time aside to visually remind myself that left unchecked, I had the possibility to do myself and my account, but do myself emotionally and my account physically damage. So I don't know if you want to comment on that, Steve.
Yeah, I mean, it's a good process again, and there's always lots of ways of achieving the same outcome. What I find interesting when I listen to you talking, my clients talking, podcasts, sports people, musicians, whoever it is nobody's doing it the same way. And this is what I try and get over. This is why I find sometimes doing group workshops difficult, is because they want kind of the, what's the playbook, what's the 3 steps, what's the 5 steps, how should I do this, how should I do that? And yet I spend all my day reflecting on the fact that I'm like tomorrow I'll have, several one-to-one sessions tomorrow, might work with some people on the same challenge, but I'm not having the same conversation. We're not doing the same techniques. We won't be doing the same formula. It's all the time it's being shaped. The way I frame it with my clients is we're doing a series of ongoing experiments to find out what works for us in our situation to try and achieve what we want to achieve. And that means there can't be a blueprint. There's no formula for success unless it's a unique individual formula. So like when I hear you talking there, that's a great example, both the Guy Ritchie plus you, of how you're using similar processes to achieve a similar result, but in slightly different ways. I often, with my clients, we might do what we call some mental contrasting. So we might take a moment at the start of the day and bring to mind an image of the trader we don't want to be. I.e., if I trade badly today, what does that look like for me? Yeah, we might just get a quick 10, 15, 20 second, 30 second.
That's clever. I like that approach. You ask yourself, if I trade badly, what would that look like?
How would it look like? How would I feel? And we kind of just try and embody that for 30 seconds or so, 20 to 30 seconds. Then on the flip side, the mental contrast is we now imagine if we've traded well and we've been our best trading self, what that would look like, sound like, feel like. 20 to 30 seconds, that's the contrast. And there'll be like obviously a difference between the two. And then the next layer, for those who want it, can also be, okay, what might be the situations today, or a situation where I know that I'm going to have to maybe I'm going to be challenged, and maybe my old self is going to break through, or I'm going to have a challenge to be my new self, but a moment of challenge, or it could be a couple of moments, it has to be just one, and how am I going to deal with it when it shows up? Okay. And that's a very effective but also researched protocol for behavior change. So we do the mental contrasting first, followed by then an example of where we might get tripped up or what the challenge might be, and we see ourselves coping with it, which is a really nice. And you can do that whole process could be done in 90 seconds to 2 minutes. And lots of my clients, we have a variation on the theme of that. And sometimes it's not always for the day. It could be, the end of the week. If I've traded badly, for some of them, it's it can be a goal they're working towards. I don't achieve my goal. I do achieve my goal. What do I need to do in the next moment that might be challenging, and so on. So, but again, it's a variation on a theme.
Yeah.
So it's not completely removed from what you were saying or what Guy Ritchie's doing, but it's not exactly the same, but we're trying to achieve the same thing. So when we look at behavior, we've got the form of the behavior, what the behavior is, then we've got the function, what does it achieve? So what we've got essentially is the function is similar. We're trying to basically keep our behavior on track. That's the function, avoid being the bad habits, but the form of it, what it looks like, could be different for you, my client, and Guy Ritchie. And this is the key thing about trading, is the functionality might be the same in the behaviors. What it looks like, what you do to maximize upside, adding into your winners, could be different from somebody else. The function is the same, profit maximization on the upside. The form, what it looks like, might vary based on individual markets, strategies, and so on. And this is where I think it's really important that everybody is always looking to keep shaping what they are doing.
What do you mean by that, shaping what they're doing?
So essentially not trying to be someone you're not. Don't try and do what somebody else does per se. You're always like I think it's that Michelangelo, when he talked about how, you give him a solid block of clay and then he's gradually day after day after day, he's just shaping it, refining it and smoothing it off. And it's an ongoing piece of work. I think we're like that, and some things we try will work. I do stuff with my clients. I think it's going to be great. And they try it and go, Steve, that didn't work for me. Okay, great. That's fine. That's good feedback. Okay. Do we want to achieve the same result? If so, what do we need to do differently? What else can we try?
Okay.
Or they say it worked, but not quite as I thought it was going to. So there's an ongoing process of kind of doing new things, letting go of stuff, tweaking up, tweaking down. Some things we keep on doing, but it's this continual, we come back to that word kind of evolutionary process. But for me, that is what it's like. It's an adaptive process. You are not the same trader you were probably 2 years ago or 5 years ago or 10 years ago. So you have shaped your thinking, your behaviors, your mindset, your practices, your process, all that's in continual adaptation, maybe stable for some periods, but not forever. And you're not trying to be somebody else. I think one of your things that you've done well is you are you. You trade like you. And that's why you do it so well. And you've made it work for you.
Yeah, that's true. No, that's true. I can't help but thinking while you were talking about that, you can't see this, none of you can see this, but I have a camera here and the camera wasn't high enough. So I've stacked a lot of books on top of each other to sort of make it up in the right height. And the very top book is probably my favorite book of all time. It's the book called The Mamba Mentality by Kobe Bryant. And I bring that up because I can't help but bringing that into the equation that we're talking about here, that when you look at Kobe Bryant and any other professional athletes off the pitch, off the track, off the court time, in the ratio of the amount of time they are on, you're thinking, well, hang on, Kobe Bryant probably played, without knowing basketball too much, but is it 3 times 20 minutes or 4 times 20 minutes? But say he was on the court for an hour and a half. But behind the scenes, he was probably practicing 4 to 6 hours a day, if not more. And you're sort of thinking, how many of us are preparing 20 hours of trading research and trading time only then to trade 2-3 hours a week? I don't think we do that. I think we've got that tipped on its head. I think we'll probably pay a bit of token attention to, oh yeah, maybe I should do a little bit of meditation, maybe I do a little, but otherwise it's just very unproductive screen time, which is something I want to talk to you about later on when you are asking me a question about what I am doing with my time. But I find that that's an interesting comparison, the amount of time that we are spending observing the market versus the amount of time that we're spending actually observing ourselves and going over our old behavior and going over our old trades. And I find that if that ratio was somehow skewed back into a balance that resembled more that of a professional athlete, I think our performance would also disproportionately explode in a more positive direction.
Well, I think there's definitely room for people to spend a bit more time thinking about themselves. So I always think about trading as having 4 core components: skill/knowledge, strategy, self, and situation. And I can normally bucket most things into one of those 4 levels when I think about why is somebody doing what they're doing. And once you've got skill and strategy to some decent level, it largely comes down to the self, how you manage yourself, physical self, mental self, emotional self, relationships that you've got with yourself, beliefs, values, goals, all of this stuff that in a game as such is what's making the difference. The difference in sport and trading, if I think about it for my pro clients, my institutional clients, is there's no sport in the world where you have to compete as often or for as long as you do if you are competing in the markets institutionally, because many of my clients will be doing 9-10 hour days. Some will be doing longer, and that will be to some degree required in some form, and they're doing that 5 days a week. Most will do probably some research and some prep work on a Sunday evening as well. Some might do some evaluation on a Saturday morning. So let's call it a 5.5 day week. And you could be doing that at 52 weeks of the year. There's no off season. There's no practice time. So sometimes the challenge for traders, and this might be true for those who are non-institutional because they might have jobs and trading, is finding the time to do the self-work isn't always that easy. Again, obviously I'm big into it, so I'm not dismissing it, but it can be a challenge. So I think we've got to kind of find effective ways of doing it as well. What the balance is, again, I think depends on the person, what they're trying to achieve, what their goals and aspirations are. But I think if you're going to try and get the best out of yourself as a trader or an investor, then at some level people realize you've got, and this is one of my questions for you, as you when we talk later, is there'll come a point where they realize they've got to work on themselves. You won't get any further by reading another technical analysis book. You won't get any further by reading another fundamental analysis book. You won't get any further by speaking to somebody else about the markets. There'll come a point where it's a bit like a breakout in the market. The breakout will only occur when you have that realization that, to get from this level to this level is about me.
I think that's very well put. Okay, I'd like to move on to the next question. Question number 5. What happens in the body and mind when a trader has had a particularly good or bad day? And what are the practical steps to reset to ensure that the following trading day is not negatively impacted by the previous day's performance? Would you care to take a stab at that?
Yeah, can I have a stab? Well, I'll lean on the work of John Coates. John Coates wrote a great book, which I think you've read as well, The Hour Between Dog and Wolf. Talks a lot about the biology of the trading experience. And actually what's interesting for me is John did his research at the same prop trading group that I was working at in my very first years of working with traders. So but John's research, and I think that those that have followed, would basically say that in a situation where a person is making above average gains on a day, so having a good winning day, we're going to see some changes in the brain, mind, body system. We're going to notice, for example, at the steroid hormone testosterone levels will increase, and that again has been measured, so we know that it does happen objectively. Along with that, traders get increasing sense of confidence. They become more risk-seeking. They experience more of feelings of excitement, and that obviously can impact and color market perception and trading behavior for the next day, if not reset. When traders are making above average losses, if we go the other side of the equation, then we get a similar impact, but reverse. So we get the steroid hormone cortisol. We will then notice lower levels of perceived lower levels of confidence, risk aversive behavior, and more prone to feelings of fears, anxieties, stress, etc. So we get two very different experiences, which are biologically underpinned, going back to our discussion earlier about the role of the body in trading. Risk decisions are not a psychological process alone. They are the brain sits inside the body, 2% of body weight, 20 to 25% of energy consumption. So, the brain's embodied. So when we're making decisions, when we're taking risk, the body is involved quite heavily. So how do we reset? Well, it's a good question, because again, obviously, it'll depend on the extent of, well, there's a number of factors. It depends. First of all, it depends on the person. If the person looks after themselves physiologically, so if the person is well conditioned physiologically, and this is what John alludes to in his book, is your level of physiological toughness, and I would say also psychological toughness, will mediate the reaction you have. So if your nervous system is strong and robust, you'll get the ups, you'll get the downs, but they will be mediated through the strength of your system, and they'll have less impact. So there's prevention. But for all people, there's going to be some level of acceleration or deceleration away from, let's call it, the baseline. then what can we do? We've got to think about it, first of all, physiologically, because we're having a physiological/biological response. So again, different people will do different things. Everybody will end up doing what works for them. But some things that I would say are common in my clients are the use of physical activity and exercise in some form. For some, that might just be a short walk. For some, it's an intensive exercise session, all variations of, to deal with the physical energy that's being stored up in the body. So the stress response, both excitement and fear, have a high energy, high arousal states in the body that we need to dissipate. And if you think about fight or flight, we're not fighting, we're not flighting, we're sitting in front of our screens. So we need to get rid of the energy. So I would say most would use some form of physical activity physiologically. Some might do things like breath work or meditation to almost kind of just bring the state down to, let's call it, a more homeostatic balance type point. Psychologically, I have a big preference for things, we often call it the daily download, a chance just to write down what's been going on, what thoughts you're having about what you did, how you're feeling, being able to recognize those feelings of excitement and so on as well. So yeah, and obviously combinations of all of those.
Thank you. I do have a side question. When you are asking your clients to do a daily download, do you have or do you as a consultant ask your clients to set a time aside to audit what they have done, with you?
We don't set it aside because some of my clients I'll only speak to once a week. Some I might only speak to twice a week. Some I'll speak to a lot, depending on if they're having if a client's having a really tough time, you might speak 2 or 3 times a day. So sometimes the conversation becomes the download. I am allowing them some space and time to express what they've experienced, how they're feeling about that, how they're thinking about that. And I'll generally allow kind of, let's call it, the outpouring of that as part of the process. And then we may then do some reflection upon that. But the prime thing I want them to be able to do is to put those thoughts and feelings into words, whether it be verbalized or written, which allows them to get a little bit, to kind of get it out. It's a bit, in crude terms, for me, it's a bit like a flushing the toilet. If you've got all these negative thoughts, feelings, or these intense thoughts and feelings building up, and there's never an outflow, at some point, like a toilet, it starts to overflow. Now, most of us, before it overflows, would flush the toilet. And so what I try and encourage my clients to do is metaphorically keep flushing the toilet. So physical exercise is a good way that we can physiologically flush. Verbalizing, talking to somebody, or writing those thoughts down is like a mental emotional flush. But we're just finding ways to kind of get these things out. And then actually, as we get the thoughts and feelings out, we can recognize them as thoughts and feelings we're having, but not that we have to act on those thoughts and feelings. And that's a massive difference in terms of an experience between acknowledging that I'm having some thoughts and feelings about the money I've made or I've lost, but I don't have to act on those thoughts and feelings. And if I also can dissipate the energy from my body, and I can kind of like reset the body, and I can kind of reset the mind and look at these thoughts and feelings as thoughts and feelings, that dual process can really help to reset. And then the final step would be, I'm probably done well, ideally a good night's sleep, key for a reset. Then the next day, a refocusing on the day ahead, having kind of downloaded from the day before. Sleep then almost becomes a transition. The new day becomes a new kind of temporal marker, a new time point, and then a refocus on what we want to do, how we want to be in that day going ahead. So that's kind of, there's almost like a dealing with what's happened, and then there's a marker point, and then there's like a right, and now it's about what we do going forward.
Okay, point taken. Let me go to question number 6. Can you explain why we are it is a bit of a follow-on, I admit. It's a bit of a follow-on question from question number 5. Can you explain why we are most vulnerable to big losses after a period when we've done well?
Winner effect, again in John Coates's book, but again observed in animals, traders, sports people. Boxers is a good example. People that win keep on winning. until they get so overconfident that they get beaten and then they start losing. So the basic biological mechanisms are, you win, you have a win in the markets, you receive as a benefit, obviously a financial gain, you get a little dose of testosterone increase that goes with that. That then makes you more confident, makes you more risk-seeking. Let's say now you take maybe a slightly bigger trade, you act on that confidence, you act on that willingness to take more risk. Let's say you get rewarded again, which is good. And now you get even more testosterone, the cycle increases. When you win, you keep on winning. Risk appetite increases. But there's a point where that risk appetite is increasing, but maybe complacency is creeping in. Maybe the risk reward is shifting and changing. Maybe the quality of the trades being taken is changing. And of course, then at some point, that winning run will come to an end. But by this point, you've probably got larger than you would normally have positions. Maybe not as process driven or as well structured or planned as normal. And of course, then because you've been increasing size, those losses ultimately become big. So, overconfidence is the big driver. Let's call it as a psychological framework. And it's very common. It's why lots of my clients will often talk about this is more dangerous than actually losing runs. A lot of people lose far more money from their winning positions gone bad to when they're in a period of drawdown, when they may be a bit more risk averse, they're a bit tighter, a bit more cautious. So it's quite important. I have a framework we call behavioral risk management when we're working with clients, and we basically try and help people to identify as individuals when they're most prone to making mistakes. Essentially, when are you most prone to doing behaviors which are going to be unhelpful? And winning runs is a classic one. For most people, once we start making above average gains, we should start really monitoring that and noticing it, because we are moving into an area of high risk. And in some of the professional trading groups that I work with and have worked with, they are monitoring this for people. So they are identifying when traders are moving into these kind of above average gains periods, above average losses periods, where we know that likely there can be biological, psychological, behavioral shifts which may not actually be favorable in the long run.
Wonder if I put something. No, okay, sorry. I think I just messed it up here. Let me just bring that back. I wanted to show my performance for 2023, because I did very well in the first 3-4 months, and then I had a more or less a 4-month torturous experience where I just kept losing every single day. And when I audit my performance and I audit the year, it became very apparent to me that I had I emotionally was incredibly difficult for me just to even exist as a human being. And I think that because trading to me is so integral into the fabric of my life, I live and breathe for trading. Having to wake up every morning and do the same thing over and over, even though that you are on a horrible trajectory of a drawdown, and not really knowing what you can do differently about it, apart from what you're already doing. So you're doing you're doing the sleep, you're doing the exercises, you're doing the preparation, you're doing the auditing, and yet you can't hit anything. It's like 2 steps forward and then it's 4 steps back, and you're wondering, but I am doing the same that I did during my winning streak. I'm doing the same that I did in 2022, which was a phenomenal year. This is my personal experience. I was wondering, knowing that you told me when we spoke during the talk in London, saying that in some cases it's been quite a tough year for a number of your environment.
Yeah.
And I'm wondering if they went through some of those same experiences as I did, where the market kind of changed its tunes, and they somehow, like, at least for me, I have to speak from point of view of me, is the volatility from January to March was playing straight into my A game. But then the volatility died down, and I'm not blaming that. I'm saying, okay, so the volatility died down. Great. I should have been much quicker to adjust to that, but I wasn't. I was playing it as if we were still running around the track at 200 miles an hour. And that was a horrible time. If I was your client, or maybe you can relate to what some of your clients have been through in 2023, what would you comment on that?
The key question for me with clients is, if your P&L or your performance has changed significantly outside of the range of what we would normally expect it to do so, the question is, what's changed? That's always my first question. If P&L has changed outside of the norm, for not on a one-off day, but over a period, what's changed? And it's only going to be two things. It's either going to be the market. In fact, it could be two things, but there could be three outcomes. It could be the markets have changed and the traders doing the same thing, but what they do isn't effective within those markets, the new conditions, the new context. Or the markets are the same and something's changed with the trader, and that could be within work or an outside of work contextual change, and it's affecting their execution. Or both the markets and the trader have changed. But in the vast majority of times with my clients, if we see a P&L deviation away from the norm, significant and extended, markets have changed. That's often the cause. Then the questions are, and again, there's different responses, is what's the playbook for that individual in a situation when the markets change? And for some traders, I've had some clients that have taken time out of the markets this year, extended periods of time. Markets are not for them. They can't see it changing to fit how they want to, how their sort of style as such. And so they've made the decision to stay away from trading, wait for things to change back. I've got other people that have stayed in. Some of them try to do the same things, maybe like you were alluding to. I've realized it hasn't worked, and they're doing the same thing now, but with smaller size, waiting for things to maybe shift and change. And other people have kind of flexed, adapt. Some have found different markets to trade in a similar style. Some have adapted their own style to their new market. So there's kind of three broad variations of do nothing, flex and adapt, or keep doing the same thing, but at least recognize that when it's not working, scale down the sizing. I'm not saying that either is better and or worse. It's what works for the individual. And I can think of 3 traders this year that have all gone through pretty tough times, who've all approached it in pretty different ways and have all come out of it, relatively well, even though they had different strategies for doing so.
Okay. Is that something you want to share, or should we move on to the next question?
No, we'll move on. Yeah, move on.
Okay. All right. So let's move on to question number 7. During the COVID crash, a friend of mine made close to 7.8 million in 2 months on a deposit of £100,000. Then from May until September, he went on to lose all the profits made. What would you have advised him to do if you had spoken to him in May, and what would you have advised him to do in September? Can you explain from experience what happened to him during May until September, and what lessons that might teach other traders?
So just to clarify, he made the 7.8 million by May?
Yes.
Yeah, and then so it's from May till September, he's basically gone from 7.8 million back down to whatever he's gone back down to. Yeah.
Yes.
Okay. So in May, he's made this significant sum of money, much greater than probably he's ever made before, is what I'm guessing.
Yes.
Yeah. Okay. Again, with my clients, I try and help them to make decisions that they feel are right for them. So the answer is always it depends. I wouldn't say the same thing to 2 different people. And again, it's hard to comment on individual cases without context or more information. So I sort of talk in general terms. This is a classic example. First of all, is I'd be curious with any of my clients, how did you get from 100,000 to 7.8 million? Because that's obviously a pretty significant increase. So, and that could again just be great market conditions, and we've seen this in markets, in previous years. Great conditions, traders have made phenomenal sums of money that they've never made before. Yeah.
Yeah.
The question is, what's the quality of the trading still like? Because at some point, again, this is, and again, from the questions below, this is your classic, probably, risk seeking, overconfidence, making money. The big danger here, as also happened, is, you now give it all back through the same process. So if I was seeing him in May, I would be, and let's assume we're having a one-to-one session, I'd be curious about, looking where you're at, how have you got there, looking at the quality of decision making. We do a review, do an assessment. We would also be looking forward. What's the game plan going forward? A lot of people in this situation won't have a game plan going forward. What are the risks? I'm always curious with my clients, almost every session. Over the next period of time before I see you again, what are the rewards, opportunities in the market, and what are the risk threats in the market, and how are we going to manage both? And obviously the danger here with this, the biggest threat at this point in time is it gives a large sum of that money back. So my question would be, let's imagine, and I'd probably normally go, let's say, 6, 8, 12 weeks into the future. So let's take a 3-month time span. Let's imagine it's 3 months time and you've given all that money back, because that is a possibility, or you've given a large chunk back. What are all the reasons why that might have been? And then we kind of then come back to the present day and look at opportunities to maybe manage that and so on. But this would be a situation of high risk. So if I was with my own client, we probably talk pretty regularly, because I know at this point now, the risk of giving it back is probably the biggest behavioral threat. And so we need to monitor that. We need to manage it probably quite closely. A person on their own might find that quite difficult to do. This is a benefit of working in a team or an institution. You've got people who are trained to manage this behavioral risk. Hard, it's really hard. If you're an individual trader, and you're trading from home and you're trading big sums of money and you're making a lot and losing a lot, to manage yourself through that, is very difficult. I mean, it's hard for institutional traders to do it, even when they've got support and people around them. It's a challenge. It's acknowledged as a challenge. So, I can empathise with this person's situation. But that'd be my first thought would be, oh wow, this is a lot of money. Well outside the norm. Overconfidence. This is the big problem here. It needs to be managed. Needs to be monitored. Keep things tight. In September, assuming he's giving it all back, we're also going to have a person, my assumption now, obviously, is going to be pretty disappointed with themselves and frustrated, and a whole load of emotions. I mean, it's pretty traumatic when people get to these situations. It can really drain people mentally, emotionally, and physically. So the recovery period from that, for most people, is not going to be quick. So we've just got to work out, how do we recover? How do we reset? How do we work through the emotions that are showing up? And then actually part of that actually is not trying to suppress it or deny it. The danger in these situations, often with smaller sums, is people try to be positive. I'll be positive. I'll just crack on. I'll move forward. I'll be okay. And they kind of cover up all the stuff that's really playing out inside the mind and the body. And we've got to get all that out and address it really almost before we do anything else, whether that means taking some time out of the markets or whatever. So but it's often a difficult time. But the most important thing for me is, whatever you're thinking or feeling, you've got to think it and you've got to feel it, and not cover it up.
Okay, that's some very useful comments. You're right. It is very anecdotal. Let's move on. What qualities are human beings born with that are beneficial for trading, and what qualities are we born with that goes counter to good trading? If at all. I mean, you might just say, this question is not relevant, or I don't know. We don't have to have the pearls of wisdom on every single question.
Give me a proper mental workout. Okay, so let's start with the obvious. The first one is cognition, that we can think, we can problem solve, we can analyze, we can plan, we can strategize. I mean, that's our advantage over all other species. So that will be an advantage, obviously, equally in trading. I would say adaptability. I think humans are massively adaptive, and actually, even as we go through the struggles in the world we're going through now, and some of them obviously are pretty dramatic and distressing, And some, like, things like AI are obviously, are threatening in some ways. But I still maintain a basic hope that no matter what problems humans are faced with, we'll find a solution. And I think that's a really, and that's the same in the market. So I see it in my own traders over the last 19 years. Markets change, technology comes in, algos come in, AI comes in. Markets will shift and change. The world will shift and change. Traders will shift and change. And the traders that keep in the game will be in the game because they're adaptive, and humans are adaptive. So I think you have to be adaptive to survive in the market. So I think that's probably a good quality. Learning, the ability to learn, which probably ties into that, I think is also key. I'm going to say emotions. People might say, well, why is he saying emotions? I'm a person that's trying to trade without emotion.
Yeah.
Emotions are tied deeply into our, biology. The core essence of that is fear and excitement, risk and reward. I think if people learn to use their emotions well, there can be a massive advantage in trading. So I would say emotions. Another one actually that's probably a curveball is something called theory of mind, which is the ability of humans to think about how other humans are thinking and feeling. And this is important in markets because obviously you can trade price action. You can trade the market as it is, but the market is a collection of other people. And if you, certainly some of my energy trading folk and commodities trading folk particularly, they will have a good sense of who they are competing against in the markets. And once you can start to get a sense of who you are competing against and what they might be thinking or what they might be feeling, then you can predict how they might then act. Then you can work out, well, if they do that, what happens to price? And now you can think about what you might want to do within your own strategy. So that kind of theory of mind, I think, is something, again, which is a very human capability, which I think is probably a high level trading trait. So seeing the market beyond, and the analogy, actually a good one, is actually poker. So you can get good at poker playing mathematically, but the very best poker players are playing with a combination of mathematics, but also they're reading people. And I think you see that in some of the very best traders. They are doing the math and everything else, but they're also sensing and feeling the market and understanding who's in the market and where the pain points are and when they're going to get greedy, fearful, all those kind of commonalities that we might experience, but also, and then what does it mean in terms of what they might do, and therefore what happens to price, and therefore how do I factor that into my own decision making? So I say there's some of the ones that would be beneficial. Or the second part, ones that would be unhelpful.
Yes. What qualities are we born with that goes counterintuitive to good trading?
One might be seeking comfort. So most humans would seek comfort over discomfort, and I think a lot of trading requires you to be, or good trading requires you to be uncomfortable. So that would be one. Well, we know that obviously there are, from Kahneman's work and others, Tversky and Rich Thaler and so on, there are so many potential, I think there's 180 or something different biases that might be part of our wiring, so to speak, that might be unhelpful in trading scenarios. So again, I'm a bit of a mixed feelings on biases, because on they're often there because they're useful and helpful as well. So they're not always unhelpful. I mean, loss aversion, if we weren't afraid of losing at all, I would say that would be unhelpful for most people.
Yeah.
So it's kind of, it's almost like, what's the dosages we need? When do we need it? But so I think some of the biases in there maybe would be unhelpful potentially. We might have to kind of change how we think. Herd behavior might be one again. I think that could be unhelpful because, some of the best traders I work with are independent thinkers or contrarians, or they're very willing to argue against the consensus. Certainly so. So the fact we are herd animals might be unhelpful. Again, it might depend on your trading style and so on, but they're kind of ones that come to mind immediately.
Okay.
I'll tell you one other one actually, which I think also is worrying too much about what other people think of us. I think there's a very strong tendency in people, and maybe more so now than ever, to worry about what other people are doing, what they're thinking about us. And that takes traders away quite often from just doing their work, doing their process. And I see that a lot actually in my institutional clients, particularly if they're having a tough time or someone else is doing well, worrying about all these people around them and you know, if you're doing well or not, which I think is unhelpful.
Yeah. Do you think that has anything to do with our emotional development as human beings and our our degree of comfortableness of where we are in life?
Yeah, I think there's a number of factors. Yeah, I think there's stage of development. There's obviously our learning histories. For some people, they won't care as much as other people do. Personality factors, contextual factors, time of life. I think people might get to stages in their life, maybe particularly older people, those in their 50s, Tom, perhaps 54, that sort of age, where we might, you know, be less concerned with what other people think and maybe more committed to, you know, what we might want to do and have our own sense of direction and so on. So yeah,
Yeah.
I think there's,
No,
again,
I agree.
lots of factors,
Yeah.
play out.
Yeah, no, I agree with you. I think a Steve 30 years ago may care a lot more than Steve
For
in
sure.
present day time. And the
Yeah.
same could be said for me.
Yeah, for sure.
Okay. I think we are at the penultimate question. 1 second. No, okay, we go. What lessons has your consultancy to, I wrote hedge fund, but I know it's not just,
Yeah.
what lessons has your consultancy taught you about human beings, if any?
I think
Well,
the
can I just help you a little bit here? Because one of
Yeah.
the things that I really admire about you is that you have an innate confidence that human beings, we will adapt, we will survive, and we will overcome whatever problems needs to be overcome, as long as we don't bomb each other to smithereens first. But
yeah,
yeah,
that is a possibility.
yeah. Let's try. Yeah,
Well, there's a few things that come to mind. I mean, I think I find my work really challenging, and I find this conversation challenging. I find this whole topic really challenging, and I think the longer I've done it, the more challenging it's got, because sometimes the more you know, the more confusing it all gets. But I also find pleasure in that, and I think the insights I've got around working with my trading clients have really been around this kind of, you know, they're people that are on a daily basis making risk decisions under conditions of uncertainty. That's the laboratory that I'm working in. And they're obviously, you know, they are incentivized to do well, to make money. It's stressful, it's pressurized. So there's a whole load of learnings around what does that take, what gets in the way of that, you know, psychological, biological, the social context. So, you know, on a daily basis, I'm exposed to, you know, new learnings, new experiences that all kind of fit under that umbrella. One of the things I think that's really, I think it's interesting to share is just the variety of different risk takers that I meet. You know,
yeah,
I mean, I've worked with thousands of traders all over the globe, and they're different. You know, different people have different risk personalities, different risk preferences. Some are cautious, some are very adventurous, some are very intuitive, some are very analytical, and yet all of them can find ways to be successful. And I find that really interesting. Much like in sports, I think, you know, all of us probably have got a sport where we could do better than others, based on our genetics and disposition, strengths and interests. I really like the idea that just the variety of people that can coexist in the same domain. Fallibility, I think, is an interesting one for me. I mean, I come back down to a lot with my clients is, let's never lose track of the fact that in the word human performance, the first word is human. And let's remind ourselves that we are humans who are trading and investing, which is very complex and difficult and challenging, and we won't always get it right. In fact, you won't always get it right factually. If you're lucky, you'll get it right about half or more of the time, maybe a bit more than that. It is difficult. You'll have setbacks. You'll make mistakes. But innately, it's quite a satisfying profession. But we are humans. So I think, you know, human fallibility is important. And then I think just the other things, just go back to that adaptability piece. You know, again, because I've got a few clients I've known for a very long time and a few firms I've worked with. I just love seeing how they've adapted and changed. And it's not easy. It's not like adaptation is easy and we just do it naturally. It takes work, it takes effort, it takes commitment, it takes time, but it's all possible. So it's and all of those things, the biggest output for me has been it's made me better as a person. It's made me better as a coach. It's allowed me to experience that and work with these people and gain insights and stuff. So it's so the lessons really have been not just about beneficial for how I help them, they've been also as much about how I can improve myself in working with them. So it's a bit of a win-win.
Okay, yeah, of course. Well, Steve, and we are at the end of the line then.
It feels like it's been like an interrogation, Tom. That I feel like I should be. I'm going to be waterboarded next or something.
I'm sure it's not that bad. Okay, here's a really, really tricky question for you. What do you want for Christmas?
My wife's been asking me that question.
There you go. I knew it. She called me and said, get him on air and get him to answer what he bloody wants for Christmas, because he just says, I want peace and quiet.
And the answer is I don't know. I'm trying to. I've got to write a list and give it to her by the end of tomorrow, I think. So it's yeah, it's
cutting it fine, huh?
Yeah. Well, I'm at that age where most things that I want, I'm lucky enough to be able to have, and I don't actually want a lot. So it's a bit of a dilemma. So
yeah. Okay.
Are we swapping over?
We can do.
Okay. First question. I'm just, rather than going full on like you did with me and kind of.
Do you know what?
You
can show them all, and you can mix and match how you want.
Yeah, no, I'm gonna go a bit of mix and match, but I'm gonna start with number one because I thought I'd just give you a bit of a warm up question rather than diving you into something too tricky like you did to me. But it's also the first question I ask most of my clients because I'm really curious. Again, this sense of just learning why people do what they do, because fundamentally understanding motivations and why we do what we do is important for me as a coach, but also for you as a trader. So yeah, just again, and some people may know, some may not, but I'm curious about kind of from that kind of very first stages of kind of what hooked you or got you interested into trading, whether it was something you'd been aware of or not, and just kind of how you got into it initially.
Okay, what I will promise you is I'm going to be brutally honest, even if I along the way get some things out there that people didn't know about me or that shocks them. My mother and father were well-to-do, and then they divorced, and then they were certainly not well-to-do anymore. I lived with my father, and he emotionally fell to pieces, and it was difficult to seeing a father emotionally fall apart, because it felt as if you, and I was the 7, 8, 9, 10 years old, you felt like you had to be the strong one. In part of the process of that, when they were well-to-do, I attended a school in Denmark, which would undeniably be the most affluent area of Denmark. And my school friends, and some of them will probably see this interview someday, and they will recognize this, and they will, they'll add up all the facts. This was a time, for example, where every boy and every girl were wearing Lacoste, and they were wearing fancy shoes called dockside shoes. But my father couldn't afford that, so I would be sent to school with a little fish rather than crocodile. And whilst my school friends in those formative 10 years are the nicest human beings in the world, I say that because I met them at a school reunion in 2015, I don't think that they can imagine what it's like for a young child to feel that level of inadequateness compared to all your compatriots. And I had this burning desire to make money. And I'll tell you a little funny anecdote about how that actually manifested itself. So if I received, say, a 10-pound note in a birthday present, I would then go to the bank and I would convert the money into pounds or pennies, because it then gave the resemblance of being worth more than a 10-pound note. So I was fumbling through my youth, sort of torn between football and skateboarding, and never ever giving trading any thought. But then again, there was no online trading in 1985, 1990. It didn't really begin to seriously kick in 2003, 4, 5, and 6. And those people who are lucky enough to join the trading community today, well, they're so much better off and with so many more opportunities than I had when I started. But then through a stroke of luck, I read a book called Liar's Poker. Liar's Poker was written, or is written, by Michael Lewis, who had been a dealer / trader, sales trader for the old Salomon brothers. And what I took away when I read that book was, A, he's making a lot of money. B, he's in London. And I was in this environment where I often say that when you change environment, you also have an opportunity to reinvent yourself. And I felt that I was forever going to be shackled in the environment of where I grew up in Denmark. And I thought, hey, do you know what I'm going to do? I'm going to go and take a university degree in England, because A, it gets me away from the toxic environment that I felt in my particular family constellation. It gives me an opportunity to perhaps really discover who I am as a human being, as opposed to what my brother and my sister and my father and my mother wants me to be. Because oftentimes when you are the person that was born 10 years later, you often will always be the little one. And it wasn't like I felt that I needed to prove anything. Rather, I just felt like I didn't want anybody to comment on what I should be doing. And so I went to England, part to liberate myself, but part also to pursue the idea of being a trader. But I was just a little bit too ahead of my time, because you didn't have an opportunity to be a private trader back in 1992. You just didn't. That opportunity probably didn't come for another 15 or so years, where you will a very small amount of capital was able to trade a leveraged account of, well, you can't do that within ESMA anymore, but having the opportunity to trade high leverage didn't really start until 2005 and 6, where the platforms became something that you could actually truly trade from, and the spreads weren't so what I often joke that when I started trading the Dow intraday, and the Dow at that point was at trading around 10, 11,000, the spread between the bid and the ask was 8 points. You try and make a living trading the Dow. The Dow is trading a big range day in the Dow was 60 points, maybe 100, but 8 of those points was eaten away by the spread. So it certainly didn't have the easiest of circumstances either when I started, but it was, for all intents and purposes, trading for me was a salvation to being that person that I truly am. And through trading, I found out that I love taking risk. And I see that in my upbringing, that I would do things that the conventional way of thinking didn't want to do. I'm probably one of the first people who actually managed to leave Denmark to go and study abroad and self-finance it. So hopefully this is not in any way of bragging. It was just that, to me, trading represented an opportunity to pursue something that was immensely mentally challenging, and that to this day is still what drives me, and with bigger sizes than when I started, is this constant, no matter how good I was yesterday, it's a clean slate today. And I like that. No, I love that. I also, at times, I loathe it when I go through the drawdowns. But trading, it to me, is much more than a vocation. Trading is where I found my niche of that thing that I'm really, really good at least in my own. I might not be so good compared to, say, a hedge fund trader, but in my little niche, I'm really good at this, and I make my money from trading, and I only have myself to rely on. That's what I love.
It's interesting as you talk through that, because one of my questions was going to be, is your sense that some of that early, the desire, the motivation, the taking the risk, the independence, was that still there today? And actually, one of my questions for later was, what is it you think that sustained you through what has been a very long trading career, which is interesting. You talked earlier about, in your answer there about you looking back, you can recognize that there were you did things differently. You didn't always conform to the norm. As you were saying that, I was thinking, skateboarding at that period of time.
I used to have long hair.
Well, you used to have hair. I mean, that's probably hard for us to imagine from in the first place, though. And I say that as a guy not far from where you are now as well. But I was just curious because obviously that's often seen as a counterculture activity. Certainly more in those days than maybe it is now, where it's slightly more mainstream. But when you look back, can you find examples of either situations or things that you did or experiences you had that now that you know who you are as a trader, you kind of go, actually, I can see now that that's something that actually enabled me to get to where I am. Oh, actually, yeah, that experience or that person, can you kind of find things in your learning history which actually in some way shaped you to get into where you are now?
Yes, I can. Just to stick with the whole skateboard scenario, have you ever stood at the top of a skateboard ramp on a flimsy little piece of wood with 4 wheels underneath, and then you're trying to drop in? The amount of strained wrists and bruised knees and hips that were so bruised that you couldn't stand up, but you couldn't lie down, and yet somehow you just persisted through that, in part because you wanted to impress the girls, but in part also you had that obsession that you couldn't be seen as the weak one, and also part about that. When you got up on a skateboard, it just offered you that freedom when you were racing down the hill on a tiny little piece of wood, and you're probably doing 20 miles an hour and a perfect asphalt, and this part thrill, but this part fear of, boy, I hope there isn't a pothole that I can't see. Our beloved David Paul often said that the closest you ever come to God are the ones that are racing motorcycles, because they are driving down the motorway at 180 miles an hour, and they're not wondering whether they filled out their tax return or if they left the oven on. They are having a religious experience because they are as close to being in the present moment as you will ever be. Yeah. And I find that perhaps is also what I am so immensely attracted to in trading, is that it takes everything else in my life away and put it on the back burner. And especially when you're trading big size, you don't sit there and wonder if the trivialities of what should I have for lunch is a foregone conclusion when you're trading a 1,200 pounder point position in the FTSE, and it's just gone 10 points against you, and you're thinking, okay, my stop loss is 15 points away. Do I take a loss of 12,000 pounds now, or do I ride it to the 15,000 loss, or do I hope that it's going to turn around? Have I done my statistics? Have I done my everything? And I find that, as sad as it may sound, but I don't think I would be the human being that I am now if that was taken away from me. I would probably find something to replace that almost thrill seeking, but it's thrill seeking from the point of view of being extremely controlled. You know how you often see, for example, that Fast and Fury movie series, they often at the credits say, this is done by professional stunt drivers. Please do not do this at home. Please don't try and replicate this. Well, I can say the same for what I am doing. I'm an extremely professional human being who's been doing this for a long time. I'm not ever going to find myself being jeopardized financially because of my activities, but nevertheless, I do sail very close to the wind, whether it's going to be a good day or a bad day.
Yeah, it's an interesting one, the risk piece, isn't it? The skateboarding, there's a risk reward component to skateboarding, riding a motorbike. I did a lot of work with extreme sports athletes when I was working in sports psychology. And
yes, that was your previous profession though, wasn't it? Because you mentored an Olympic team, I read.
GB bobsleigh ladies team, yeah.
Okay.
Yeah, So, but it's curious because, again, there's a great book called The Rise of either the Superman or The Rise of Superman by a guy called Stephen Kotler, who is a world leading expert on flow. But in that book, he talks about particularly extreme sports athletes, and how they take increasingly greater risks. But there's a large component of that which is obviously the addiction to the flow state, but also flow state's a learning state, so you can kind of get better and do more when you're in flow. And you'd have got that in skateboarding, and it sounds from, as you were describing it there, you're probably getting parts of that kind of immersive, in the moment, present, focused, loss of self-consciousness, just doing what needs to be done state, in your trading, again, in the style that you have chosen to do. This is why I'm always curious, because there's many people on this call who are traders. You do things in a certain way, and I'm always curious, like with my clients, why do you do it that way and not something else? What are the experiences? How have you shaped that? How are you bringing your personality into the markets? Because that's where all of us are going to get maximum success, is looking at who we are, what we do things, and we can evolve and adapt, but working from that core. So that kind of risk piece for you was interesting. What about, because with risk reward, obviously there is the risk side of it, is obviously a key part. So the risk is skateboarding, you fall off, you're on top of the ramp, you go to drop in, you wipe out, you break an arm. That's a risk that obviously most skateboarders will go, okay, well, that's inherent in the activity, we're going to fall off. Traders lose money, sometimes big sums of money. They make mistakes, they get things wrong. Obviously, you wrote your book largely about obviously dealing with losses and so on. So the word I would use with my clients is, what's your relationship with kind of risk and losing and making mistakes and that side of trading? But I'm just curious about kind of how you think about losing, how you think about mistakes. What's your mindset around that? And again, what it's like, but also maybe insights that you've got about where that came from, because we weren't born with our mindset. So that's been developed through time.
Yes. Some of you might have guessed that I was the person who won the 7.8 million and lost it again, which I did. And it did something to me. It was, I would say it was a real instrumental piece in the development of what later became Best Loser Wins, because there was an enormous humiliation in having lost that kind of money, and talking about it is painful, but necessary. I find it was humiliating, because as the process evolved, this was during the COVID crash. As the process evolved, normally I don't talk to people about what I make or lose, and I don't do that because I live a very ordinary life, and I like you said with Christmas presents, I have everything that I could ever want, and that's enough for me. And so much of my existence is focusing around the trading, but then focusing around charity. Yeah. And during that process, I had told some people what was going on. And then when these same people, family, asked, hey, how's it going? To have to explain to them how your recklessness had caused you to lose what you had made was unfathomable painful, because I felt that the very things that they had perhaps accused me of when I was younger, the very things that perhaps had stopped me from being who I was, or who I truly am as a human being, I had actually given them the very ammunition to cement that argument that they were never wrong about their perception of me in the first place. And so after the loss in September came a long period of time where my trading was reduced to a pittance while I worked my way through the issues. And I began in real earnestness to write. And that book that I wrote was never intended to be for public consumption. It was meant to be a timepiece for me to remind myself of what was probably the most painful experience in my professional life. And it turned me into a different human being. I became much more mindful of my frailties, of my insecurities, and it became the stepping stone for a process that radically altered the way that I took risk. You may ask, how do you go from 100,000 pounds to 7.8 million? Well, when the market crashes, you just double up, you blind double up, double up, double up, double up, and you don't even look at your stake size. And so you will have 1.2 million evenings in the Dow Jones because the Dow Jones is down 2,500 points, and you just sell 100, sell 100, sell 100, sell 100. But then when the market turned in 2020 and it began that enormous rally, I fought it all the way up. And part and parcel of my preparation on an almost daily basis, and why I think I weathered, I'm looking at my P&L curve in a graphic form for 2023, why I think I weathered the storm like I did this year was because every day I would remind myself of what damage I was able to do to myself if I let my emotions just run unchecked. And I do that visually. I go through what in my book, I call it my book of horror. My book of horror is, look, some people are driven towards behavior and some people are driven away from behavior. And I'm very much in that camp of, if I see something that I don't want to be, I like to remind myself of that, because I know that if I can move away from that kind of behavior, that doesn't guarantee profits, but it tends to guarantee that I won't make major mistakes. And that's really important to me, because there's very little that I can control in my trading, Steve. Practically the only thing I can control is where do I buy or sell short and where's my stop loss. Everything else is up to the gods. I have no say over that whatsoever. And being constantly reminded of that goal for the day actually sort of resets me from whatever crap that I've experienced the day before. So that particular incident truly shaped me into a different kind of risk taker. And I'm glad it did, because it would be a damn shame if it hadn't, because then the lesson would never have been learned, I find.
I think it's really powerful for people on this call to hear you talk about that situation, because most people probably wouldn't ever get to. I'm fortunate, I hear it a lot. I say I'm fortunate, it's unfortunate, but I'm lucky I get to hear these experiences or share them with people. Most people in the trading world won't get to hear, people who are successful at what they do talk about, getting things wrong and the intense pain that comes with that. But people will be able to resonate with it, because all people will have lost money as well. But I think it's powerful hearing it come from it, and sharing the experience of, and you were very open about this, about this feeling of humiliation. These are strong, powerful emotions, and this is the sort of almost like the dark side of trading. It can take. I hear it from my clients. Shame, embarrassment. All these feelings. And then on the flip side of that, again, I think what's also interesting for people is, and many people who maybe have only known you more recently, is when they see you at the screens, in the last few days or the last few weeks and so on, they see a version of you. But as you said at the end there, that's only that version based on, obviously, as a result of that experience and how it shaped you. And actually those, I had a question, maybe it's, I don't know where it is, maybe it's number 3 or 4, but I'm always keen with my clients, are there events or people that in some way have shaped you as a risk taker? And they can be like that, a large loss, can be a large gain, can be specific individuals that in some way have been influential in how you do what you do. And again, this is going back to that piece when we talked earlier about the learning history. You know, and we can't you can't delete that. We can't delete memory in the brain. But we can make sense of our experience, and we can learn from that experience, and we can move forward from it, you know, as and when, you know, we're ready to do so. And obviously, as you have done, obviously, which is good.
I think, if I may allow to just bring it a little home, that when you are sat on that kind of gains, different kinds of thoughts are going through your head, because that's a life-changing amount of money. And you're beginning to think, well, should I invest it? Should I buy this? Should I buy that house in Mallorca? You know, those kind of things. And you're beginning to shop around catalogs that it no longer says Asda or Tesco. It's Harrods, and then you get right back down to Asda again, which is very healthy. And I can laugh about it today because I know that my integrity to my vocation is intact. But at the time, it was heartbreaking because your mind began to drift into places of economic stability that was then, it wasn't ripped away from you. No, it was that death by 1,000 paper cuts, day by day by day, and you're watching yourself slow motion crash into a wall, and it's as if you are helpless. But there's something really, really positive about it. And the positiveness I find is that I wrote a book about it, and whilst I don't make that a central theme in my in the book, I think that the book has changed many people's perception of what is the right way of taking risk, and how do you as a human being emotionally prepare yourself on a grander scheme, but also on a daily basis, on how to be a risk taker, because that really is what the book about. So you could say, well, it's actually a very small price that I have paid in order to give so many thousands and thousands of people an opportunity to review through the prism of my eyes, but without the heartache that I experienced, of how to actually go about to be a risk taker. So from that point of view, you know what, I can't take it with me either, and I'm very comfortable in life as it is. And I find that one of the greatest gifts, and I'm wondering if you could relate to this, but I find, you know, that saying that, you know, those who can do and those who can't, they teach. I find that to be nonsense, because I find that immensely successful people in certain endeavors, they actually generally just love passing on that knowledge to other people, because holding on to that knowledge just becomes nil and void. And when you feel a sense of, or degree of social responsibility, and that's certainly something that is one of my, as a human being, one of my appealing parts, but also something that I constantly have to battle with, it's my empathy. Seeing other people suffer brings something up in me that is immensely difficult to handle, but at least now I have the means to be able to make a difference, whether it's through the written word or it's actually through physical, you know, putting a sleeping bag in their hands because they're lying in a doorway or an alleyway somewhere in London and they're freezing. That to me is that being able to pass on that knowledge to other people is as rewarding, if not more rewarding, than making 10 points at a maximum stake size in the FTSE. Don't get me wrong, the maximum stake size reward feels good, but it's not a lasting feeling, because you know I have to repeat it again in an hour or tomorrow. But that feeling of changing another human being's life and their trajectory through the written word, through the spoken word, or through the acts of generosity, you know what? That's a MasterCard experience. That's priceless, because that stays with you. Are you okay?
Yeah, no, I was just reflecting on a couple of things. And so I think the first one that came to mind, I think it feels, or it sounds like the book in a way has played a cathartic effect. In a way, it's been a way of being able to kind of process and maybe work through the experience. But But I think secondary to that, and probably maybe equally, if maybe not more beneficial now, is it's also created a different level of meaning and purpose to the situation you went through. So, at one level, you go through an event like that, and as an individual, you go through it and you can reflect, you go through it, or you go into it, you go through it, you come out of it, and you can make sense of it, and you can get some meaning and purpose as an individual, as a trader, as a person. And that's really valuable. And the book maybe helped with that processing. But then beyond that, and maybe this is, again, only you will know, but there's a secondary layer, maybe even more powerful than that, which is actually the book that only potentially resulted from that experience now impacts, a significant number of other people over, lifetimes and generations, enabling them to benefit and learn from what you went through, plus all the other wisdom and stuff that's packed into the book, which again then layered in with obviously your desire and your values around helping and supporting, adds an extra layer of meaning and purpose to the event, which again maybe helps with the I guess the getting through it part of it, or coming out the other side of it, and giving some meaning and purpose to the event itself, and so on. I also want to quickly circle back to your quote about just on a lighter note, those who can do, those who can't teach. And you won't know this, I don't know if you do or not, but for a few years I was a PE teacher, actually down in Poole, not far from you. And there's a film called School of Rock with Jack Black, which my kids love. And there's a line in there which is those that can do, those that can't teach, and those that can't teach Jim.
Ouch.
A phrase said many times, very harsh, but possibly also true, but very harsh. So look, let me dive in with this question, because when I was rereading your book the other day in prep for this call, and I think it's somewhere maybe towards the intro, but you said there's a bit where you stopped trying to understand the market and you realized you had to understand yourself. You then stopped trading, you worked on understanding yourself, and now that I hear this, having heard what I've heard previously, it kind of makes a little bit more sense to a degree, but maybe it's the same thing. But when I wrote the question in preparation, not knowing what I know now from your previous response, I was curious about what brought you to that realization. And I was really curious about, what was the work that you actually did in understanding yourself and the impact. Now, just to qualify this question, are we linking back to the same event with the... No, okay, cool. Because I didn't want you to have to kind of repeat it for the sake of it. So in that case, that's the question, and I'm curious to find out more.
Okay. If you'd seen me back in 2009 when I was made redundant in the city of London from City Index, you would have seen a man who had an immense amount of knowledge in terms of technical analysis. I mean, I'd given about 1,000 talks for City Index about charting and technical analysis and moving averages and all of those technical indicators that makes technical analysis so interesting and diverse. I was also well funded because I had been a very frugal saver throughout my career. And so when I started trading for myself, on the surface, I had everything. I had money. I was very well funded. I had a lot of knowledge about trading, about technical analysis, and I had an experience of 10 years of being on the front line of the financial markets. I had lived through the crash of 2000 and 2002. I'd lived through the meteoric rise of the bull market from October 2002 up to the highs in November 2007. I'd lived through the Northern Rock of the world, the Lehman Brothers of the world, the crash into September 2015. I'd seen explosive bull runs and bear runs. I've seen it, everything. And yet when I sat down in front of my desk as a self-employed trader, actually I realized very quickly, I don't have the foggiest idea. I didn't do that with a CK. It was 2 Gs. I didn't have the foggiest idea what was going on, which was, of course, insane, because of course I knew what was going on, because I had practically watched every single tick in the FTSE and the DAX for a 9-year period throughout the entire trading day, from 7 morning till 9 night. And yet, when I had to start risking my own money, not the company's money, but my own money, the whole ball game changed. And I traded for a few months, and then I realized this is not going anywhere. I'm losing more than I'm winning. And that's when I first truly began to embrace the idea that all the technical analysis in the world means very little if you don't have the will to act. And I know that I bore people to tears when I talk about Liam Neeson and Christian Bale fighting swords in Batman Begins, the movie, and they're on that frozen lake, and Christian Bale talks about how he wanted to protect his parents. I know it's a movie, but it's just that where Liam Neeson in the shape of Raj Gold says, knowledge is nothing without the will to act. And so if we know something to be true, but we are not acting upon it, well, then we might as well not have that knowledge at all. I mean, it's practically the same as not having the knowledge at all. And so it was, at the time, it was summer, and I thought, you know what, I need to do something different. I need to remove myself from the screens. And I packed my boots. I'm quite a big fan of walking, especially walking in mountains. And I flew to Spain, and I started walking what is known as the Camino to Santiago, which is starting in southern France, North Spain, and it works through down to Pamplona, and then the flat terrain, and then up in the mountains, and into Santiago de Compostela. It's a Christian journey, but I'm not necessarily a Christian or a believer of sorts, but I certainly could, shall we say, embrace the spiritual aspect of that, perhaps just losing yourself in the mountains. But I was really lucky, or maybe I'm being looked after, who knows, but I was really lucky, because at the very same time there was a gentleman walking in the mountains side by side with me. And it's not like that you are clinging on to people when you're out walking, but you talk. Now, oh, where are you from? Well, I'm from California. Well, I'm from Copenhagen. And you just talk and you relate to people, and then you don't see them for days. That's how it works. But this particular gentleman, I'll make a very long story, a short story. He kind of took me under his wings. He was a Hollywood producer, and he had actually a past as a special boatsman or a Navy SEAL in the US elite forces. And as we were walking in the mountains, he was talking to me about how elite soldiers in training are being pushed to the breaking point, but they're not pushed to the breaking points because the intention is not to break them. The intention is to get them to understand their own limits. But the way that they go through and finding these limits is through repetition, exposure to certain aspects of whatever piece of warfare it is that they need to learn. And so I was, I candidly just told him about my experiences as a trader and why I felt that I wasn't getting the best out of myself, even though that I had this enormous luggage of knowledge about trading. You have to understand, I have 2 university degrees in finance. So on paper, I should be a natural born trader, but I wasn't, not at all. And he began to talk about how his colleagues in certain places, it wasn't so much so much the mechanical aspect of warfare they had to learn, but more the, shall we say, the emotional aspect of carrying out operations. And the way that they do that, they almost defragmented the process into the tiniest, smallest steps in order to then overcome one step after the next step and overcome the next step after the next step. And he said, it's never our intention to take a person to the breaking point. We were never taken to a breaking point, but we were put to the test through repeated exposure. And what I found from that conversation, you know how some people just, I mean, I first met you in 2007, and I'm ashamed to say that I wish I'd listened to you better in 2007, because it took me a few years before I began to realize the words that you had told me. And I had to listen to a Yankee guy from over there telling me how to actually defragment my life bit by bit and almost painstakingly rehearse every single little aspect of my game, rather than just assuming that I knew it all. And that, Steve, was a real turning point for me, because the first thing I did when I came back was I reviewed all my trades. And then I actually began the process, the daily process of, I bought here, I sold here, question it. I also began a process which may sound a little alien to those people who are listening now, but there's several aspects to it. One of them was that I began to train on a simulator, but not where I could see the whole chart, but I could only see one bar at a time. And then I asked myself, what would I do here? What would I do here? What would I do here? And it was painful, because the progress was so slow. I also began a much deep meditative process of where I would simply close my eyes and I would imagine losing big. And I would sit that and I would hold that image in my mind, so that my nervous system just became conditioned to dealing with bigger and bigger sizes. And these steps, combined with a deep introspective, because, you know, I have to understand, Steve, I had nothing else to do. I knew I'm not going to go back and working for a CFD company. I'm not going to go and work for brokers. Either I do this or I go and do something completely different. So I didn't really have much choice. And I knew that I couldn't stand any more technical analysis books. I couldn't do any more courses. I had to actually deal with what was truly standing between me and what I wanted to do. And I kept circling back to that fighting scene on the pond with Liam Neeson and Christian Bale, their real character names, knowing that actually the knowledge that I have, if I'm not able to use it without having any kind of emotional baggage, is worth nothing. And that was the real turning point, because, Steve, I actually spent a disproportionate amount of my time no longer looking at charts, but I was actually looking at myself. And then I began to scale up my trading, but very, very, shall we say, very mindfully. Okay, today I'm trading 20 pounds a point. I'm going to execute 30 trades. And that was actually a lesson. I know one of the questions you ask, who has had a profound influence on your development? And I would love to say that it was all you, Steve, but the truth is there were people that were truly, truly inspiring. And I would say that the premier one of all of them is the belated David Paul, because he was the one that sort of added something to my trading that was truly responding to who I am as a person. You know, that aggressive skateboarder, that attacking the ramp. Well, I'm attacking the market when I'm adding to my winning positions. But I always added to my losing positions. But having seen how that had fared for all the clients when I worked at Citi, and thinking, hey, I'm not doing that anymore. So circling it all back to the square point here, it was a very meticulous process of, I'm trading 20 pounds a point, review. I'm trading 30 pounds a point, I review. I'm trading, and so forth. That's the God honest answer to how I developed. There are some people I'm looking at YouTube. Some things that springs to mind is like the guys who are using footprint charts, or the Inner Circle Trader has a huge community, and they're very proficient. I don't have any of those skills. I'm not that way inclined. I'm just this guy. Okay, the market is moving up. I'm going to buy, and I'm bloody well going to trade big, because I knew that if I was going to make 10 points in the FTSE, I would rather make 10 points in the FTSE trading £1,000 a point than trading £10 a point. The process is the same, especially if you've been through all the intermediate steps from £10 a point to £1,000 a point. It's just a question of repetition. But I find that the vast majority of people don't have the necessary patience to go through that process. And that's a shame, because there will be so much more very, very adept traders. And here's a little lesson to life. Life is going to happen whether you do this or not. And to me, life is just about, okay, I want to be the very best that I can be. And that is my driving obsession. I'm not doing it for the accolades of the world. I do it so that I look myself in the mirror and say, yeah, you did pretty good there. You can do better, but you did pretty good. That's what's driving me.
I don't even know where to begin to unpack all that, because it's there's so much in there for people. I hope people are reflecting on this and will re-listen.
And also, we've been at this for 2 hours, Steve.
That'd be really.
Yeah.
Wow.
We have. I know that you want. I mean, maybe we can do this some point in the new year. You know, in March and April. It's been a wonderful experience, but I'm also mindful. I don't want to hold you much longer.
No. I've got a couple more questions I'd like to ask you. Okay. I just wonder if anybody else is still on the call, if they've still survived us for 2 hours.
I don't know.
could be me and you having a chat. Anyway, I'm enjoying it. I'm enjoying it. So if it is just me and you, then I'm enjoying it anyway. There's a lot in there. I mean, the one thing for me, the central mess. Well, there's two key things I took out of that I think I would share with other people. Is one, just in whatever level it is, whether it's taking time out, walking in the mountains, full reflection or not, but at some point pressing the pause button. And taking the time to reflect on where you're at in your trading, what's working, what's not working, do some sort of analysis, as you did, obviously in very great detail in a very full-on process. But I think there's not enough, and even with my own clients, I encourage this, not enough people get to points where they press the pause and take a step back and reflect and look at what's going on. That's almost like part one, which obviously, and you had the benefit of that good interaction in the mountains with the special forces guy and so on. But that's almost like the easy part. It's hard, but it's the easier part. What I think then is a significant, and then it could almost be understated, is the amount of work that you then went through to get to where you are now. So, because I think often people can go, oh yeah, I reflected, I did a bit of this, I did a bit of that, and then I kind of popped out to the next level. My sense is it wasn't like that at all. This feels like, and you can maybe give us some insight, but it feels like it's an extended period of time.
Can I show you something? 1 second.
Yeah.
Do you know what this is?
I'm going to have a guess at trading journals or notebooks or analysis or reviews or something.
Yeah. And do you know why they're there? They're there in that pile every single day to remind me never to go off the script. I have a script. It works for me. It's a certain procedure. Follow the procedure. Don't go off script. That's my legacy. That's my testament. It won't be shown to anybody. This is just my real personal, intimate relations with the world around me, my life. But to me, that is my constant reminder. Don't go off track. Just follow the script. And if you want to introduce something new, make sure you rehearse it. Don't all of a sudden decide to, like 3 hours into the trading session, oh, I'm just going to trade a bit of Bitcoin. I don't do it. There's an element as a being financially and fiscally aware of my limitations. I don't go off script. It's why I have coined the expression situational analysis as opposed to technical analysis, because I find that I need certain situations to happen and then I will attack them because I've been there before, I've seen it. But if it falls out of my merit, then I'll leave it alone until I've studied in depth. So one of the reasons why I'm taking December off was not just to take a break from trading, but also I wanted to study footprint trades. I wanted to study inner circle trades. I wanted to study fair value gaps. I actually wanted to study. I may use it, I may not use it, but at least I wanted to give it the benefit of the doubt because I wanted to prove to myself, yes, this is valuable or it's not valuable. And then if it is, then I will begin to incorporate it into my trading. But I find that by being true to who I am, but also being open to the world around me, my life becomes so much richer because I don't go in with a dogmatic mindset of I know everything. Rather, I go, I'm curious. I'm curious because the curiosity is what drives life to be incredibly interesting. I never ever dismiss anybody whenever they say, I think you should buy here or you should use Fibonacci. Or it's like, oh yeah, okay, well, maybe for you, but I'm just gonna, it's a little rich for my blood or whatever it may be. But I find that having a curiosity about your vocation is also what keeps it staying fresh, Steve, because you never ever assume that you know it all. And that to me is an paramount philosophy of life.
Well, it's also the death of mastery. Once you think you know it all, you've lost the whole concept of mastering the craft. The master of the craft knows that he's not mastered the craft.
It will be a cold day in hell when I'm not somewhat nervous and apprehensive as I sit down in front of the screen and the day begins and going, oftentimes, especially when I run the Telegram, I'm going, how am I going to do it today? I don't know. But then somehow you just get into the power of now. And you forget everything else and you get into the rhythm of it. The market begins to talk to you and you respond.
Yeah. Well, that's where you're trusting yourself. There's that part where we have the pre-stage where we are anticipating, and actually maybe even part of that is helpful, to get into what comes next. I was having a conversation with a client last week and he's been having a bit of a challenge with something in his trading. I won't say too much, but he's recently read a book about flow that I recommended. Actually, this is one of the Stephen Kotler books where it talks about before flow, there's a stage which is struggle. So you have struggle, then you pop into flow. And sometimes for lots of us, there's a situation where it might be a bit of anxiety, worry, there's a bit of difficulty, and then we can kind of pop into that state where we kind of just move into doing. We kind of forget about thinking and worrying and so on. We're just into the doing, the being and doing state, mainly probably being, the being driving the doing. Which again is where the benefit of experience and competence, all come into play, which obviously you've got, in abundance. So, and then we just got to trust ourselves to let it happen. Tell me a bit, because you touched on this earlier, and I think this is critical for people to kind of gather their thoughts around. Sometimes people say to me, what do I see in the best traders? What makes the best better than the rest and so on? And there are a variety of factors, but a couple that I always come back to. One would be independent thinking. They're doing things very differently to other people. So it's kind of like an intellectual edge in some way. But the one that I often probably cite the most is opportunity maximization. That when markets are good, the best traders are maximizing those opportunities, and that could be for a period of time, or it could be like in on one position. Now, I know that you are very much competent at, and a part of your process is adding into winning trades, adding into winning positions. And obviously, my first question that you asked me was about risk aversion in situations of gain and risk seeking in situations of loss. So, and obviously, you are doing the opposite on the upside. You are becoming more risk seeking in a situation of gain. So what interests me, and I think will interest other people, is it's one thing to hold your winning trades longer. That's almost like stage one, is can I go from cutting them short to holding them at least to my profit target or close to? But then the level above that is then adding into those winning positions. And I'm just curious about, how did you get to be able to do that?
Okay. Through pain. I'm not a masochist, but I'll give you a practical example from yesterday. The FTSE gave me a setup, and I didn't take it. And then, as it often happens, it exploded in my favor, and I was not on board. When something like that happens, I take a screenshot of it on a piece of paper, and then I walk away from the screen, somewhere away from the screens, and I sit and I meditate and I hold on to that thought. It's the only way that I know how to solve any emotional imbalances in my life, is to confront it head on. Why do I add to winning trades? Is it just because I want to make more money? No. Adding is actually, I don't know what the English word I'm looking for is, but it's a different word. It's a different name for doing the very opposite that comes natural to me. I have a belief system that is that my body and mind, especially my mind, is not designed for risk taking. On the contrary. So being so acutely attuned to what my nervous system is responding, if my nervous system is responding, saying to me, take your profit, I interpret that as add to your position, because my nervous system is almost always wrong. It's almost always doing the opposite of what I should be doing. And so if I am buying the FTSE at 20 and it goes 25, and my P&L I know now is going to be plus £1,500, so I'm thinking, okay, my subconscious is sending me as I'm going, that's not a bad take. You can, if you do that £1,500 every day, you'll be making £375,000 a year. That's a good income. The moment I register thoughts like that, I go, yeah, I need to add, because it's almost like an auto cue that is coming in and overriding a program that, for whatever reason, I can never get rid of that auto program. It's constantly running in my mind going, it always wants to add to my losing trades. It never wants to add to my winning trade. It always wants to do the very wrong thing. All the mistakes that you can possibly think of, my subconscious wants me to do that. Move your stop loss a bit further down on a long position, or a bit further up on a short position. And I've come to that point where I am so tuned into what my nervous system is telling me that I'm using it as an, shall we say, an contrarian indicator.
Yeah.
But only through the repetition and truly, and you know what? It's a bit like, you're falling off the half pipe and you go back up again, and you're falling off the half pipe and you knock yourself over and over. I actually deliberately seek that out, because I'm thinking, hey, I'm probably one of the few people in the world that actually seeks out that pain. Much of my life philosophy is in trading is based around doing what the 90% don't want to do. And I don't think that there's many people that go to that extent to expose their own flaws and weaknesses as I do. And that is not because I want to compare myself to others and say I am so much better than them. No, but to me, I actually really need to make this money, because otherwise the alternative is that I go and work for somebody else. So I am prepared to undertake that pain in order to ultimately get what I want. But I've outsmarted my own nervous system. I found a way to override it. And I've always known that, right from the beginning, I felt that I had a good instinct on price action. But one thing is to have the right instinct, is another thing is to act on it. And then the third thing is to, when you're wrong, is to not be bogged down by it. I actually genuinely believe that one of the greatest trading books that was ever written was a self-published book called Phantom of the Pits. I don't know if you've ever come across it, but it was written by two floor traders. And essentially, I stole that title. Best Loser Wins is actually in there somewhere. So the pit trader, who's known as Phantom of the Pit, he says, to Art Simpson, who's transcribing the book. So he's saying something, and then Art says, so what you're really saying is that the better you are at taking your losses, the better the trader you are. And the Phantom of Pit says, yes, so kind of best loser wins. And I wrote, and so I'm thinking when I read that is a great title. Oh, sorry, it's just a great title for the kind of person that you want to be.
It's interesting because every time you're talking, there's like about 5 or 6 or 7 points that come up, and I'm not writing them down like I would if I was in my coaching session. But there's a few things in there. I mean, what interests me is consistently, you're talking about pain, you're talking about, you're moving away from all these different events, places you don't want to be, things you don't want to happen. So that's kind of that continual away from motivation is coming through in different forms, which is interesting. The part about that last piece about, who do I want to be? I often say to my clients, who do you want to be as a trader? Who do you want to be as a portfolio manager? What qualities do you want to demonstrate? What's your philosophy going to be? What are you going to be about? What are you going to stand for? What are you going to be accountable to yourself for? And kind of really get them to think about that. And then, on a daily basis and even in the moment to bring an awareness to, how do I want to be in this moment? What's it all about? But, a lot of people don't have any clarity on who they want to be, what their philosophy is, what their beliefs are, their values are. So then you can't really have any strength of character as such. So that was interesting hearing that bit. The piece around, see, I think the overriding nervous system, I agree with. You have overridden it, but I think what you've done is you've kind of, it is an override, but in a way, what you've done is you're utilizing it. You've used experience and reflection to understand when it's giving you certain cues and when those cues are helpful or not, and how you then might use them in essentially, as you said, as a contrarian indicator. So it's kind of being quite smart, it's being intelligent, it's kind of being in tune with the body, but just recognizing that the signals you're getting, whilst they may be useful, let's go back to that earlier conversation, for many humans under normal conditions, they may not be the same signals that are useful for you when you're trading the markets. And so actually, if you do the opposite, that becomes a useful behavior. That's what becomes kind of workable. But what I found most interesting in that piece, and this is something we talked about in that seminar, was this idea that just because we're thinking it doesn't mean we've got to do it. Just because your nervous system is telling you one thing doesn't mean you've got to act on your nervous system. Just because your mind is spewing up all these thoughts about either getting out the position or closing the position, taking the £1,500, just because you're having all those thoughts, maybe lots of them, maybe even intensely, maybe even having those feelings, you're not acting on it. In fact, not only are you not acting on it, you're going completely against that. And I think, again, this is a really important lesson for people, because I think we all too often think, oh, I feel this, so I do this. I think this, then I do that. I think £1,500 is a good day's P&L, so I'm going to take the £1,500 just because I was thinking it was good. But we don't have to do that. If we are clear about our process, if we're experienced, if you've got a good process, if you know who you want to be as a trader, if you've got a philosophy, if you can be true to all of that, and it means doing the opposite, then that can be done. And of course, as you've talked about, through exposure, the more we do it, the better we get. We become what we practice. It's as simple as that. Whatever we practice as people, traders, is what we're going to become. That's the shaping and learning process. So, I think there's a lot in there. I'm just conscious of time, only because I think Simon said to me we've got a limit on what we can do on the recording time. I think it was about 2.5 hours. I don't know if Simon can confirm that or not, but that stuck in my mind. Okay. But I did want to ask you a final question, which I think would be useful.
Okay, can I make a comment before?
Yeah, of course.
One of the most profound things I've heard all year, and I immediately took into use, was actually from you. And this is not a pat on the back session that you pat my back and I pat your back. It's nothing like that. But when you did that talk in London, you said something. I was sitting in the audience listening to you and thinking, oh boy, he's running over time here. That was a joke. But then you said, imagine who you want to be and how would that manifest itself if you were that person? And I walked away out into the London night thinking, okay, what would my ideal version of myself manifest itself? What would I do? And it actually, even in my so I say, fairly advanced stage of self-development made me realize that I've not even barely scratched the surface of what I could become. And I found that in immensely powerful visual tools, how would it manifest itself if I did exercise every day, or if I did stretch twice a day, or how would it manifest itself if I actually knew a new technique, or if I did so and so. And I want to thank you because, sometimes wisdom comes in the rarest of little packages, the tiniest little gems, all of a sudden on click something in your mind going, yeah, that's it. Oh, I see that Simon has just appeared. I'm sorry to steal the thunder. Simon, how are we doing?
We're fine, Tom. I'm sitting here loving all this conversation. It's been absolutely fantastic, gents. We are okay. I did think we had a 2-hour limit, but we've enabled it to extend to allow this extra time, which is great. So it's up to you.
Thank you. Well, I think we're rounding off. And so I would like to give the word to Steve Ward because he's written this phenomenal toolkit called Trader's Mind Journal. And Steve, I think you have a fantastic offer here, which I think I would to give you an opportunity to pitch that to the many people who are going to watching this tonight and also in the days and weeks to come.
Yeah, thanks, Tom. Yeah, so it's a Trader's Mind Journal. It's performance and psychology focused. It's been out for a couple of years now. Been one of the best written products that I've been involved in, and the reason I say that is because just the feedback we've had from people who have used it. Thanks, Tom. They just it's pretty chunky. It's 1.2 kilograms.
It is.
As people who came to the seminar will attest, it's not light, but it's a performance psychology focused journal. There's daily, weekly, monthly reflections. There's some exercises. You can see the sort of the wheel there on the screen, which is a weekly check-in across 8 different areas. Chance to download each day, chance to reset and refocus each day, reflect, review, get insights, put them into action. 12 different mastery mental training exercises that we've put in there sequentially. So it's 3 months work. If you're consistent with it, I say I don't know why I say this all the time, but it surprised me just how much positive feedback I get literally almost on a daily basis from users. So we don't have a large amount of them left, and I'm probably not going to be redoing them. The cost of publication and just the time it takes to manage it is too much. So we've got a final few I'm going to keep some for myself, for my clients, but we've got a final few in stock. And as Tom and I were doing this, and it's close to sort of Christmas, New Year time, it's a nice time either for presents or to start journaling in January. They're normally $39.99, but if you use the code TH10, you can get them for £10. You'd have to pay the shipping on top, but it'd be £10 for the actual journal. So
do they go to that website there, the tradersmindjournal.com?
Correct. Yep. Thank you, Tom. Yep. So the tradersmindjournal.com, click on the journal, and then put in your TH10. It'll be at the checkout bit, and then if you want one, you can get one for cheaper than it costs to print it.
There's no chance that book will cost less than £10. It is so heavy. It is so dense. You're giving it away.
Yeah.
Okay. Well, Steve, would you mind if I just round it up? Then
not at all.
This has been this has exceeded beyond my expectations of what I thought was going to happen today. I feel that we have truly, and proverbially roamed around our inner workings, and I feel that, and I look forward to actually watching the recording, because I think that there are so many pearls that you have given out tonight, and I'm truly grateful for your friendship, but also grateful for the wisdom. I'm slightly envious of your enormous bookshelf behind you. I've been wanting to comment that on all night, thinking, wow. Do you know what you should do, Steve? You should, as a blog post, you should actually make a top 10 of the books that have the most shaking. I think people would swarm around a post like that, because oftentimes when you're like, okay, so I had read John Coates' The Hour Between Dog and Wolf, but there were some other titles that I'm gonna have to go back because I find that if you recommend them, they'll be worth actually reading. So I think I think you should do that for the benefit of mankind. The top 10 by Steve Ward. But otherwise, I just want to thank you for your time. I know I probably run an hour and a half longer than we should have, but I really thoroughly enjoyed it, and I hope that the people who are I see the messages are coming in over here. People are thanking you, Steve. So yeah, I want to echo that sentiment as well.
Great team effort. I couldn't have done it without you. And from my side, and again, I'll just reiterate, I think it's very powerful for people to hear you talk about your experiences. You know, you're very open about it, far more so than most traders might be in small groups, let alone in front of 2,500 people. So the opportunity for them to hear from, you know, learnt and felt experience, you know, in very open and transparent terms, you know, I think is a real treat, a privilege for people. And, you know, I hope they can appreciate that. I mean, and I always enjoy our conversations anyway. So it, much as I was expecting it to be 60 minutes long, and it's gone slightly over that.
Well, there's a pattern there, isn't there, Steve? It seems to be a reoccurring pattern between us.
I did say to my wife, she said, "What's the plan?" I said, "I don't know. I'm doing a session with Tom. It's fluid. We'll see what happens."
That was wise. All right. I think I'll give Simon the final word and just say, Simon, thank you so much for hosting this. I'm truly grateful. Thank you.
It's more than a pleasure, Tom. Thank you so much, and to Steve as well. What an honor it's been to sit through and, you know, enjoy the content here, and everybody else. Hope that they've enjoyed it as well. I'm sure they have. Maybe just want to find a note for those that want to watch the full replay again. It is available here in actually just a few minutes when we switch off. Okay. The replay kind of spools, and it's available to replay. I know, Tom, you'll be able to manage the recording on one of the platforms in due course. But if you've just joined halfway through or have missed any of this, we've been live now for almost 2.5 hours. Stay here, wait a few minutes on the same link. You'll be able to come back and watch it again, because it's a content-rich session, I think. So thanks so much indeed. It's been good to work.
Thank you. Thank you to everybody who participated. Your questions actually made this the session there was. So thank you. Yeah. Hey, I think I just want to say Merry Christmas, if that's what or season's greetings, if we have to be politically correct about it. But thank you, Steve. I hope that we could do this again in the future. I thoroughly enjoyed this, so thank you.
Yep, thanks everybody. And again, season's greetings. Simon, thanks to you as always.
Merry Christmas.
Merry Christmas. Bye-bye, everybody. All the best.